and enter again here at 61.8% to complete the position. We move down, almost touch 50 but not quite. And this is why sometimes it may be good to get in within 2 or 3 pips of your support or resistance level, just due to the difference in the spreads of different brokers. And right now we're looking at the euro dollar, and the spread can range anywhere from 3 to 5 pips depending upon the broker. So that's important too. And even if it's not Fibonacci, just any support and resistance level that you're considering for your entries and exits. And we're still moving and still haven't hit 50% quite yet. Okay, we're in long at the 50% level. Okay, we're in long here at the 50% level. We want to see a close above 23.6, so we're going to take profit at 23.6, and if price should close above 23.6, then we will enter on the next bar on the pullback. We didn't quite make 23.6, and we're already in from this 50% level here. If price falls down here to 61.8, we're going to buy again. And our stop is going to be below this bar and 78.6. So whichever is lower, 78.6% Fibonacci or the prior low, that's what will be the stop level. See here, that's within 1 or 2 pips of 23.6. So if I'm really trading, I've probably already taken my profit here, but we're hitting 23.6 here, so we're out. So now we already have a small profit here, coming up from 50% up to 23.6%, and we don't want to take any additional risk unless the market shows us that it has the strength to continue. And just based on our Fibonacci structure, that can't happen until we get a close back up above 23.6 to tell us that the trend is continuing, and the trend continuation is in effect. So we're out right now, and we may even get a pullback to 61.8%. If we do, we'll get in long again, and see on this bar we may get a pullback to 50, but since 50 has already been tested, we wouldn't want to get in at 50 again here, but we may want to get in at 61.8%. Now, about our early discussions as far as trading between the lines, you see how this bar closed above 38.2%. Okay, then there's a good likelihood it's going to test 23.6%, simply because it closed above 38.2, and usually that means a test of the next level. And looking at price right now, I wouldn't assume that it would make it, but you never know. But you can see how it attempted to test the next floor up, and indeed, okay, it does do that. So see, um, you don't just have to get in on the 50 or 61% pullback. When you see a flip, I mean, for instance, the price is going down here. Now we see a flip from red to green. Price rolls back over from red to green, and it closed above 38.2. Remember, it bounces from floor to floor. So you can get back in here and take profit again at 23.6. Or if you want to go for it and you feel like in your heart the move is strong enough, wait for the close of this bar and see how far it'll go. And if it doesn't close above 23.6, and you can get out. And so now we have a close above 23.6, and we're testing the high. Normally, I assume price comes back to test 23.6 before it breaks out of that new high. We'll see if that happens here. And notice I haven't talked a lot about volume and MFI here. I'm just really covering price pattern for the most part, according to the Fibonacci structure of the market. Okay, yeah, see, here we come back down to test 23.6 and buy here and play for the bounce. If it closes strongly above this bar here, you can stay in. Okay, but if it closes back below 23.6, we want to exit. And what a lot of traders do is they play the bounce, meaning that they'll buy here and automatically just get out at 20 pips, and price moves about 20 pips in their direction, and they're in and out really quick. But as you can see, price is respecting 23.6, and it is in the process of bouncing. Now, if that bounce will be strong enough to continue price is yet to be seen. But you can see how just even playing a bounce, I mean, you can play a bounce off of any of the levels, for a quick scalp trade, 10, 15, maybe 20 pips, and you should come out ahead most of the time when you do that. So now let's freeze frame for a moment.